So, a massive corporate showdown is erupting right now in the world of online real estate. We're talking about a huge battle over strategy, shareholder value, and really a billion-dollar bet on the future of how we all find our homes.
You know, for a real estate titan like CoStar Group, this has to feel like Groundhog Day. I mean, this is the second time in just a couple of weeks that they've been in the crosshairs of a major investor. They are once again having to publicly defend their biggest, most ambitious project.
And that really gets us to the heart of this whole conflict. It's all about Homes.com. Is CoStar's gigantic investment in this platform a brilliant forward-thinking strategy, or is it a colossal miscalculation that's just burning through billions of shareholder dollars?
Okay, so let's be super clear on who's in the ring here. In one corner, you have the established giant, CoStar Group, and in the other corner, you've got the challengers, activist investors. Specifically, we're talking about the powerful hedge funds, D.E. Shaw and Third Point, and they are very publicly demanding a big change of course.
The speed of all this is pretty remarkable. I mean, this isn't some slow burn disagreement. It was boom, boom, boom. We had one letter from Third Point, then just a week later, another one from D.E. Shaw on February 4th, and true to form, CoStar fired back with a response the very next day.
All right, so what's really driving this public pressure campaign? Let's break down exactly what these activist investors are so fired up about. And here it is. This is the core of their entire argument. D.E. Shaw claims that CoStar's strategy, especially its laser focus on Homes.com, hasn't just been a bad investment. They say it has actively destroyed billions of dollars that belong to shareholders. So the way these investors see it, Homes.com is just an unprofitable business. They're looking at the mountain of cash being poured into competing in the residential space, and they are really, really disappointed with the results so far. Their demand? It's simple and it's drastic. The company has to fundamentally change its strategy now.
But as you can imagine, CoStar has a very different story to tell. So how exactly did the company push back against these incredibly serious and very public accusations?
Well, CoStar came out swinging. They didn't just disagree on business strategy, they flat out accused the hedge funds of creating a false narrative. They're basically saying the investors are twisting the facts to mislead the public.
And to back that up, CoStar points to all their meetings. They say, hey, we're not ignoring feedback. They've met with D.E. Shaw 14 times in the last 9 months alone. They argue that the investors just have a fundamental misunderstanding of their business model and its huge long-term potential.
See, CoStar says their plan for Homes.com was always a two-step process. Step one was the heavy investment phase. Build the platform, get a ton of users on there. They say that part is done. Now they're in step two, which is all about monetizing that investment, turning all that traffic into revenue, and finally seeing a big return.
I mean, you really can't get more opposite than this. The investors' demand is basically to scrap the entire Homes.com project, but CoStar's warning is that doing that would be totally short-sighted and would cause irreparable harm to the entire company.
And CoStar wraps up its response with this really pointed metaphor. They said the investors' attempt to prescribe a fix, like breaking up the company or selling off parts, is like treating an imagined patient. They literally called it activism malpractice. In other words, the investors are trying to solve a problem that CoStar says doesn't even exist.
So, with these two powerful sides locked in this very public fight, what's been the real-world impact? How has the market actually reacted to this war of words? Well, in the immediate aftermath of CoStar's latest response on February 5th, the stock market gave its verdict. The company's stock dropped by about 1% in afternoon trading. That's a direct, quantifiable reaction to all this uncertainty. Now, that 1% dip might not sound like a lot, but it's a big deal because it pushed CoStar's share price down near its lowest point in the last year. And that gives you some crucial context for why these investors are getting so loud right now. The company is already under a ton of market pressure, and it seems like their patience has just run out.
And that brings us right back to the billion-dollar question. CoStar's management is convinced they are on the verge of cashing in on a game-changing investment. But these activist investors? They believe the company is just doubling down on a huge, costly mistake. The outcome of this fight could seriously reshape the future of online real estate, and believe me, all eyes are on what CoStar does next.